Welcome to the Techno Fundamental Report for February 29th. Momentum, price momentum. It happens because you've got more, for an uptrending price momentum, you have more buyers than sellers. It's that simple. But technical analysis has a lot to do with evaluating price momentum. Now, it's a controversial strategy, but we know that, according to Walter Deemer, price is everything. He says you don't buy dividends, you don't buy management, you buy stocks. And you buy them at a certain price. And when you go to sell, you don't sell earnings, dividends, or management. You sell stocks and you sell them at a price certain. Price is everything. So when you're evaluating investment opportunities, we always start out with price momentum because what we want to see is where are the buyers? Where are they going with it? Where's the cash flowing to? Now, this list is a list of what J.P. Morgan referred to as mega winners. And this was a list that was derived from a study done between 1980 and 2014. Now, how did these stocks get on the list? They got on the list because of price momentum. Now, there's also books out there about exceptional management teams. And when you evaluate the book, you realize that it was because of these management teams able to propel these companies like a Sam Walton or a Steve Jobs. And then with Apple, for example, you see here where you get the price momentum. So we found Apple back in 2003 because of price momentum. They didn't even have a phone at the time, but the price momentum was telling us that there was something big coming. A story on Walmart was that I was working in the 80s and a fella came into my office and who worked in Arkansas, and he was making a big deal about, Walmart and being out of Bentonville, Arkansas and so forth. And, instead of looking at the price momentum, I went and looked at, the PE ratio, which at the time was high. So I didn't buy the stock and I missed out on a great opportunity. So paying attention to price momentum is pretty darn important. I thought this week it was interesting about the moon landing. There was a moon landing craft called Odysseus, and it landed on the moon carrying equipment. And the thing that was interesting is it had a navigation system that was autonomous, artificial intelligence. It had basically semiconductor chips made by NVIDIA on that spacecraft, so that when the spacecraft got within a certain range of the moon, the human control of the spacecraft ended and the computer within the spacecraft using artificial intelligence took over, landed the craft in exactly the right spot, which was down in a crater because they want to avoid too much sun. So I thought that was a very interesting situation. So you can see here what's happening here with these semiconductors. They are just really taking off. Here's the old high back in 2022-21. It's now exceeded that high and is in a very high momentum thing going on here. So with the semiconductors, definitely worth keeping an eye on. Now what I did here was to also make another point. I'm taking the S&P 100 and I'm dividing it by the S&P 500. Now the 100 are the largest stocks in the S&P 500. And you can see here that on a relative basis, the large cap stocks are greatly outperforming, whereas if you look at the small caps, which I'm using the Russell 2000 divided by the S&P, you're seeing exactly the opposite. So this is worrisome, but the thing to realize is that the small caps, they've been underperforming for a long time, and it has to do with the fact that this index, the Russell 2000, which is one of the few indexes out there that cover the small caps, have a lot of small regional banks in there, and that's really kind of what I believe is causing the problem. Now, let's just take a look at the market here. We got the NASDAQ still in a very definite uptrend, normal consolidation in here, continues to make new highs. Here's the mid caps. Actually, the mid caps are starting to perk up, whereas the small caps, they're not really perking up, but you can see here with the mid caps, we've got a very constructive looking pattern there. So overall, the 200-day moving average is moving up, both for the NASDAQ and the S&P. The primary trend is up. Everything is up. So we're in a very healthy situation here. Now, I just wanted to refer again to the Copic curve. You can see here, market making new highs. Copic curve called that bottom back here at 3,600 back in 2022. So anyway, the point being is the Copic curve is really kind of turning out to be a pretty valuable indicator. Here we have the aggression index, which is what we're doing here. Is we're taking the NASDAQ, which is growth stocks, divided by consumer staples, which is value stocks. So do I want to have a value strategy or growth strategy? Well, so far this year, growth strategy is far outweighing the value and continues to look very constructive. We're not seeing any problems with the aggression index, which is important. Our three economic indicators, again, interest rates continue to kind of be moving sideways. In fact, this morning we got results on the price consumer index, which is the Fed's favorite inflation gauge. Looks like the numbers are coming in fairly well. It looks like inflation went up about 0.4% in January, which was as expected. So interest rates seem to be stable in here. Inflation seems to be moderating. On oil, we're continuing to see oil struggle with that 200-day moving sideways. The financial stocks, meaning the large banks and the large insurance companies, those patterns look very positive. Other good news here is we're not getting a lot of new lows. If we're getting over 40 a day, that's worrisome. We'll have a one-day spike up of new lows, but basically the new lows are very constructive. Now, the last thing is here that I think is most interesting is the yield curve is starting to uninvert for the first time in a good while. So you can see the depth of the inversion, and we're starting to uninvert. So the yield curve is starting to show at least a change of character. So if you have any questions, please let me know. Thank you very much.